Now, we got a great show today. The St. Louis Fed's 30-year fixed rate average is now sitting at 6.34. Super low. But I gotta say, yesterday, I just locked a 30-year fixed rate loan at 5.375, and it was paying rebate. We're like a whole percentage point below the national average. Now, what this tells me is that refinances are now in play. It is game on. We've been expecting this for the past year, and today it actually came to us. So if you miss this refinance market and you're a loan officer, this one's on you. It is completely on you.
This is on you!
So here's the thing. Other companies are targeting your clients as we speak right now. And sometimes, as I've seen, with some pretty shady approaches, it is incumbent upon you to get in front of your clients, especially if you're on a banking platform, because ask yourself, can you offer 5.375, 5 3/8 today? That's paying rebate? Because I know I can, which means I'm not the only one. Other brokers can do it as well. So you better get to your clients before a broker does, because they're looking at the same rate sheet I am. By the way, if you want to look at my rate sheet, all you have to do is fill out the information down below and have a conversation with us about all the revolutionary things that we're doing at Capital Direct.
Now, speaking of your database, there's a misconception of ownership.
You own nothing. You don't own your database.
They owe you nothing.
Getting to do that loan to put them in your database in the first place was a privilege.
And doing their refinance is a privilege as well. And if you don't see that, that's on you.
For the past, just a number of years, there's been this idea that if someone markets to your database, they've crossed a line. They've done something that they shouldn't be doing. Meanwhile, you go out and you market to other people's databases, holding yourself to a different standard. Lost in all this is the simple fact that whomever that client is, they have a say in where their refinance lands, because it's their refinance. Because they're looking for one thing and one thing only, the best rate. You see, when people purchase a house, that can be relationship-based, in part because so much more goes into a purchase. But a refinance, boy, that's another story. Today's the day. So get it together and do the one and only thing that you can do, and that's go out there and earn the deal, because your database is mislabeled. It's not your database. What it is it's your best opportunity. It's your best chance. When you put it in those terms, it starts to make more sense, and the only ownership you have is your actions. So if you lose it to somebody else just looking to take not your database, but your best opportunity away from you, and that can hurt, but it doesn't make it untrue. So no more finger pointing. Let's just get to work and do it like today, because today is the day.
It's important that you take advantage of this refi market, because it's gonna have a quick major spike and then settle back down. That quick spike is your chance to fill your financial reservoirs before the loan drought returns. Here's the reason why. Adam's January 2024 U.S. Foreclosure Market Report reports that there were more than 30,000 foreclosure filings in January. That's up 10% from the previous month and 5% year over year. A stubbornly high cost of living and other sustained financial challenges also suggest that homeowners will be under pressure for the short-term future. Redfin recently reported that monthly mortgage payments in 2024 were roughly $250 higher than they were in 2023.
Buyers are not reacting to lower rates at these prices, and they're not going to going forward. Why? Well, inflation is a part. Did you know that core inflation came in 3/10 higher, and that was higher than expected? Did you know inflation, though low now, is expected to return because we haven't addressed the core reasons why it hit in the first place? The point is this: though rates are going down, and it will offset some of those 7s and maybe even 8s that you wrote over the past couple of years, once those are gone, it looks like we're going to be back to where we started. So trust me on this one. Harvest while there's fruit in the trees, because it ain't gonna last. I hope this helps. Getting back to the loans, a couple of the first loans we did were DSCR loans, and it opened up a whole market for more DSCR loans. Let's not sleep on these investors, and our friends over at Oaktree, I'm telling you, they will kill it with rate and service on your DSCR and all your non-QM needs. So make sure when you're shopping on your non-QM loans that you start with my friends at Oaktree. I promise you, you won't regret it.